Good evening, everybody. Okay, tonight we're going to kind of concentrate on how to identify the strong potential next moves, and we can see that actually in the Dow. We've had a nice uptrend in the Dow, a nice J-hook pattern. We're not selling off any. We have had some exuberant buying up here, but nothing has sold off yet, and even in today's trading. We even yesterday sold off. It wasn't a sell signal, and today they popped it right up again. And I would suspect with the news of the big pop in Amazon and Google, that again, even though those are specific stocks, it just kind of flows over into the investor sentiment of the whole market, that things are still positive, that we're probably not going to be selling off this market just because there's so much bullish sentiment. So the next thing we want to look at is what started this uptrend, and it was this best friend signal breakout of this downward resistance level. So again, when we applied all our analysis of a doji sitting right smack dab on the 50, followed by a gap up through the T line above this level, that told us there was a new investor sentiment coming into this new trend. Now, how long was this new trend? Well, in this case, we can see that it's in an uptrend as long as it doesn't close below the T line. Now, on the other hand, over the last few days, notice again where we had the breakout at that same time. I guess it started down here, but notice this is why the analysis of the graphics of candlesticks is so much more, what do I say, compelling. Because notice where we had the kind of a bullish harami. This is not, even though the colors of this candle is the same as the previous candle, it's still a harami, but it's more distinctly known as a homing pigeon. But the same criteria is required that if they open up positive the next day, this inside day, which is known in the Western terminology, is acting as a reversal, and we can see exactly where it occurred, right smack dab on the 50. Now, there was our left-right combo bearish signal that told us we had some downtrend in the NASDAQ. So when we use the analysis of what's happening in the Dow, which is still an uptrend, and the NASDAQ, which is a downtrend, what's our analysis? Our analysis is that there hasn't been a major change of investor sentiment, just specific sectors are selling off while others are still continuing up. Now, tomorrow, I wouldn't be surprised if we don't see the NASDAQ pop right back up above the T line because of what's happened in Amazon and Google today. So usually we take time and kind of analyze some of the other commodities or futures. Crude oil is a very slow uptrend. We can see what's happened. Gold. The hanging man gap down through the T line, failure at the 50. Where was this telling us we were going to? Right back to the 200. So it just makes a very strong indication of when to be long and when to go short. So now if you were short, we'd be more inclined to start watching to see if it's going to support here on the 200. Just gives you a much better framework to see when it's time to buy and when it's time to sell. Other indexes or other trading things like wheat, well, I was going to say wheat wasn't doing too much, but now we've got kind of a hanging man confirmation, failure at the 50 again, we might still be heading back into a downtrend on this one. So because we can see what type of investor sentiment occurs at important levels that everybody else is watching, it makes it much easier to see what was the decision of investor sentiment, or what was the nature of investor sentiment at these levels. So I know there's quite a few new people coming in to these sessions because we've been doing the 12 major signals every Tuesday for the last couple months. But the whole process of identifying the signals is that they are the results of 400 years of the Japanese rice traders identifying the patterns or the signals that have created high probability reversals. So that's just that factor alone, no matter what type of trading program you're utilizing, when you put candlestick signals on top of it, it makes your analysis that much more, have much more clarity. Mike, these sessions are recorded. Most everything we do is recorded. All right, so that allows us to not only identify or project what's happening in market trends, overall market trends, it also allows us that if we just kind of putting the stars in alignment, if we can see what type of trend we're in without a change of investor sentiment, then we can identify which stocks or which sectors are going to be acting the strongest. Just, again, putting everything in alignment. So if we know which way the market is going, we can identify which sectors are the strongest, and then we can identify which stocks in those sectors are the strongest. Now you've got a much more comfortable, high probability trade setup. So before we go too much further, I just want to remind everybody, the bread and butter training that we usually do is a 2-day training, and it's 8 hours on 7 hours anyways on Saturday, and then 6 or 7 hours on Sunday. But the important aspect of it is that we go through every element of candlestick signals, starting from the 12 major signals, where they work, what the investor sentiment was that created those signals, and the indicators or the, oh, thank you, Becky. I was going to did that myself also. The, seeing everything in a chronological order, seeing the confirming indicators are just allowing an investor to kind of change their perspective of how to be investing correctly. How do you determine which sectors are the strongest? Is there a scan you use? Choppy, if you go to TC 2000, you'll see that whatever scan formulas you've set up for identifying stocks, TC 2000 has all the sectors on there too, so you can do the same analysis on those sectors very, very quickly. Then once you find the strong sectors, you can click on the sectors to see which stocks make up that sector and go through and find the strongest stocks or the strongest signals in that sector. No, you couldn't identify today that Amazon or Google was going to have such a strong move. Yeah, there was nothing today to show that they were going to move as big as they did. Now, because candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame, most of the time you can. Well, we might as well go right to Amazon. Amazon didn't show anything one way or the other. Then I think after they reported, where's it trading? Up here somewhere. And Google, kind of the same scenario. Nothing here, but I think they were up in this range after hours. What was a sector web page? Richard, if on TC2000, there is you can go, I mean, you've got the lists of all the stocks, and then you've got other things like all the sectors, all the indexes. All you have to do is click on the sectors. Oh boy, I'll try this. You can see this whole page. Let me make sure you can see that whole page. Yes. All right, so if I'm doing my analysis, trying to find the signals and patterns, you can see up here that these are the stocks I follow, but I can, hold on. What do you want, cat? Anybody want to buy a cat? It's for sale. You can see you got all the items, all the stocks, all the indexes, and then right here you've got Morningstar groups. So if I'm scanning by the biggest percent change today, we can see that the toy and hobby stores had the biggest percent move. So you can go down like this and notice how general contractors had a breakout. So if I was interested in finding which ones were the strongest, let's say we go up here to the general contractors, I can go up here and click on this and say, all right, what are the indexes or what are the stocks that make up that index? Then I can go and look to see which stocks might be the strongest in that sector. So what you're doing is you're basically finding the sectors that are the strongest and then able to find the stocks that are in that sector. The cat is in the doghouse sector. When you identify specific stocks, do you choose sectors which have experienced the highest gains in the last day or the last week or the last month, since that seems to be rotation? No, what I do is I scan to see which stocks had the biggest percent move today. And then as I go down, start from the top, work my way down, usually probably within the first 20 or 30, I'll find stocks that had good, strong price moves or good, strong candlestick reversal signals. All right, let me go through some of this. I forget where I was. Oh, the strong, haven't been trading too many futures recently because most of the futures markets are just kind of lackadaisical. However, the dollar, right, based upon the passage of the budget, broke out nicely on a big move. And notice where it started from, with a doji right off the 50. So where's your next likely target? Probably the 200-day moving average. Yeah, I hope I don't sneeze in tonight. So anyways, that would be a sector, or that would be a futures trade that I would be going after. And this is where utilizing the 10-minute chart becomes a benefit. If you can analyze daily charts on what's moving the best, then if you flip down to your 10-minute, whoops, that's the 1 minute, 10-minute chart. 10-minute chart says, up, they gapped it up again and it's trading it positive. So would I be buying here? Yeah, I'd be buying because it's telling me they're still buying and telling me my daily chart is still working. But that's a whole different training session. That's kind of what we look at on our training weekend. All right, we've had a few that we've recommended recently, and these are all based upon strong candlestick signals. This is one of the alerts. Notice all the dojis right in here. And then what's the doji represent? Indecision between the bulls and the bears. Then when they gap it up, what's that telling me? It's telling me that after a series of indecisive trading, they've told you which way they're taking it, and they're going to start taking it up. Now, additionally, what type of pattern would that kind of illustrate? There's my fry pan bottom breakout. There's my J-hook, which is what we call the classic pattern. So I'm buying right here with the anticipation that this wave right here is going to be about the same magnitude as this wave right here. Now, this is nothing more than acknowledging that prices move or investor sentiment works the same way time after time, creating patterns that we can easily recognize. So we're looking for the breakout situations. Today, Square moved up nicely, also coming out of this J-hook type pattern. Where's our next likely target? Probably somewhere up here in this range, telling us that wave 3 is going to be the same as wave 1. So looking for it to move toward the $38 area. Now, knowing what a J-hook pattern illustrates, that wave 1 and wave 3 are going to be approximately the same, depending on the amount of time you have from to expiration, you can kind of calculate, instead of just buying, if you're an option trader, just buying calls, you can do a spread. Now here's another breakout situation. Here's our kind of our J-hook pattern, and notice the signal. This is where they opened it here, closed it here, then gapped it up above where they opened it and went the opposite direction. So Cons had a kicker signal breaking out into new territory. So how long will we stay long on this one? As long as it stays above the T-line. The TC2000 charts use next to the ticker signal. There's an icon you can click on. It'll give you options, open sector, watch list, or watch list. Okay. Yeah, and a lot of them will tell you whether that stock is optionable or not. Now, we also recommended AEO the other day. Same scenario. Wave 1, wave 2. This is why the graphics of candlesticks are so powerful, is because when it got here to the 50, we started seeing indecision, and there's our doji gap up. What did that tell us? It told us that this indecision here, now they've made a decision. We've got potentially wave 3 in progress. Oh, a bullish spread, Colleen, which means you're buying one set of options and selling another set of options that might be the target of that next wave. When you estimate the price movement based upon waves, you measure the stock run in wave 1 and then estimate wave 3 and move based upon where wave 2 ends. Yeah, so if this was wave 1, I would say this is the same magnitude move as wave 3. My audio cuts in and out a lot. Okay, that's probably a connection of the whatever your server is. So again, this becomes a high probability trade setup based upon what human nature does time after time. And this is one of our strongest reversal signals, a doji followed by a gap. So we can identify, and that's just a fine howdy do, our reversal signals. There was our inverted hammer bullish confirmation. There's kind of our morning star signal. This is BAS, Basic Energy Services. Morning star signal. When do we start buying this one? As soon as we see it come back up above the T-line. So we have a much more clear concept of there's our left-right combo, there's our scoop pattern, there's our slingshot effect, strong price move. There's our indication, again, there's our inverted hammer. Remember, the reason I put out the inverted hammer is it's one of the 12 major signals. And the probabilities, again, this is an unofficial analysis that I've done over the years that I would say that probably somewhere around 95% of the time, again, this is just unofficial observations, that if it opens positive the next day, the probabilities are probably 95% or greater that you're going to be in an uptrend. And if that's true, what type of pattern do we have setting up now? There's our J-hook pattern, wave 1, looking for wave 3 to be about the same magnitude. A left-right combo is a doji, which is an indecisive trading day, followed by a bullish engulfing signal. The doji is that little indecisive jab. The bullish engulfing is your roundhouse right strong move, telling you there's been a dramatic change of investor sentiment. Did I do it too? Yes, that's what we're doing. All right. So when is it time to buy? When you can see signals that are occurring right where everybody else is watching. So there's a bullish harami today in SORL. If it starts trading positive, you can start buying. What's your first watch? Let's see what it does here at the T line. But the fact that we can visually see what's happening right at levels or technical levels that everybody else is trading or watching gives us a little bit of a head start. Those are happening with stochastics and NOV oversold. A NOV, I don't know what a NOV means. Above, oversold. Yeah, usually when you're in a pattern, especially in a fry pan bottom breakout, you're probably going to have the pattern breakout when your stochastics aren't in the oversold area. So very simple analysis. If you see a candlestick buy signal, you're looking for it to be in the oversold area. If you see a pattern like a J-hook pattern, it's usually going to occur when the stochastics aren't in the oversold area. Does a hanging man have as much probability on downside as an inverted hammer going up? Bill, that's a good question. I've never looked at it on that basis because it's one of the 12 major signals. I just look at it that if you see a hanging man in the overbought condition and it opens lower, I close out position and or ready to go short. And I've never looked at it. For some reason, I've always been more conscious of an inverted hammer versus a hanging man. But the probabilities remain the same. The reason we're looking at the hanging man is because if it opens lower the next day, the probabilities are pretty strong you're starting a downtrend. So here's another one that we recommended a few days ago. And this is one thing the reason I wanted to bring this one up was to illustrate that there's our strong buy signal. Again, our doji gap up, breaking this downward trend channel. So part of our entry and exit strategy is, what do we want to see the next day? We want to see them trading positive. Well, what happened here? They opened lower and traded down. That doesn't mean you give up on this chart because this still told us there was strong buying. Now we can be buying it because it's come back up through this level based on this signal right here. So not every trade is immediately going to go up, but usually it's telling you there's been a change of investor sentiment. And again, with the best friend signal, the probabilities are pretty strong it's going to move in this direction. So if you see something like this, let me see if I can cut the chart off. If you see something like this, you don't give up on it because you do have a strong buy signal and your stochastics are coming up. Just give it a couple of days and see if it starts confirming. We got out of this one. Here is SQM. SQM we recommended a few days ago because it looked like it was breaking out of this wedge formation. Let me see. See how we kind of had this. Why can't I? See how we have this kind of wedge formation. It looked like it was trying to break out. We closed it out today because what was this telling us about the breakout? The reason we were buying it was because there was a breakout and it's breaking out. It doesn't tell we get out of the position because it doesn't tell us, or it doesn't mean we're not going to come back in it. Right now, there's just nothing there. We need to see whether it's going to break out this way or this way. So utilizing the other patterns that Western technical investors use, like a wedge formation, we've got much better clarity to say, all right, it didn't break out, close it back out, and wait for the breakout. Open and close above or below moving average. Don't understand if that's a question. When you can you touch on what we should do if we're still losing money in the market? Yes, if you're losing money, the one thing that I would always help me if I was losing money in the market, which would tell me, all right, apparently I'm not in the right positions. And I knew that by the fact that if I woke up in the morning and I kind of dreaded what the market might be doing that day, then I knew I wasn't in the right positions. That the first thing I should do is go down and take a look at my positions and say, why am I dreading being in these positions, which means they aren't working. So I always come back to the analysis that probably every time I put on a trade, I've probably got a high probability that it's going to work. Now remember, that term is probability, not a guarantee that it's going to work. I know that probably at least 1/3 of my trades aren't going to work. So that changes my mental affliction, I guess, that I'm not locked into something where before I realized that 1/3 of my trades weren't going to work. When I bought something, it was because my superior analytical ability said it should be going up, and when it doesn't go up, it's everybody else that's not as smart as I am didn't see the reasons for buying it. Now I at least know that when I put on a trade, if it doesn't work, close it out and move on to something that's going to give you a higher probability. So everything that I have had to do, because I was the worst investor in the world at one time, is based on what do I do to keep my emotions out of my trading. When you see confirmation after a reversal signal, do you wait to buy after it closes above the T line, or do you immediately buy after the confirmation, even if it is below the T line? The number one criteria is what is the signal telling me? Now, I'll answer that as we go along. What do in terms of money management? Kenny, this is another thing we go through on our training. The thing to keep my emotions out of my trading is that every position I put on is equal dollar amount. So that way I'm not putting my emotions into a trade. Each trade is a one unit of trading. Because if I have a $100,000 account and I've got $10,000 positions, as soon as I say to myself, oh boy, this one's going to be a real good one, I'm going to buy $20,000 worth, you can bet dime to donuts that I'll spend 90% of my time watching that trade versus watching all the other ones. So I keep them all as equal dollar amount, because even though I think I've got the best trade in the world, when it doesn't work, now I've got a decision to make, which is I want to close out this unit, not my favorite trade situation. What is the difference between consolidation? Well, you can see what's happened on Boeing. When it pulled back the other day, it didn't have a sell signal. It was just a selling day in an uptrend. So I'll show you some more as we go along, Betsy's, what makes an in consolidation versus a reversal. Now, again, when we see a morning star signal, you've got the opportunity either, if you're that close to the T-line, you might wait for it to go through the T-line just to improve your probabilities. If you're a good distance away from the T-line, let's say this was all occurring down here, if you're buying based upon a candlestick buy signal, then you watch to see what happens at your first resistance level. So depending on where you are, again, the number one criteria is the signal itself. Everything else is confirming indicators. So if I was looking to buy this, I'm close enough to those that those moving averages, the T-line and the 50, I'd probably wait a little bit and let it close up above it. All right, so if I see a bullish signal, they work just as effectively on the bearish side when we see that big, huge evening star signal. This is why we want to know what the signals are telling us, because these are the signals that provide us with our kind of our bricks and mortar of which signals are going to be the best as far as a buy or the strongest. Again, there's our evening star signal starting our downtrend. There's our bearish J-hook pattern. This is why we recommended going short today, because of that gap down, wave 1, wave 2, wave 3, probably bringing us down into this area. And VIAB, this was just kind of observe the obvious. Where's your trend right now? It's down. So when we start seeing sell signals and back below the T-line, what's that tell us? More than likely it's going to come back down into the trend area, or the bottom of the trend channel. So we recommended not too long ago shorting MRTX, again, because where did this evening star signal occur? Right here. There's our hanging man. So it occurred right at the same level it topped out before and closed below the T-line. That told us the probabilities are pretty strong. We're heading down. Where's our next potential target? Down here to the 50. Can't see the tickers. Yeah, they're up here. That's why I usually try to mention them. When stock oversold, how long stays oversold? Same for overbought. Remember, we're not buying overbought or oversold. We're buying or selling the signal. This could be in a downtrend for 3 months, meaning our oversold condition could stay oversold for months. It's just that once we get into the oversold area, you're going to be a little bit more diligent as far as watching for a candlestick reversal signal. You find that all MOMO stocks, momentum stocks, tend to move in a similar way in the market. Yes, if they're in the same sector, usually they're going to move in the same direction. You could still short, yes, you could still short this one. Now, because we know we're in the oversold area, we have a more specific stop loss, and that's another benefit of candlestick analysis, is the stop losses. Where would logic say that if we're in the overbought area and we see this at one time was a doji, what do we want to see it doing from here? We want to see it still heading down. So where's our logical place that if we shorted this tomorrow, where would we not want to see it trade? We wouldn't want to see it trade back up above that high. That would tell you the bulls are starting to take control in here. There are 2 green moving averages. Oh, there's a gray. The red line is the 200-day simple moving average. The blue line is your 50-day simple moving average. The gray line is your 20-day simple moving average. Those are the moving averages that every major money manager around the world uses to make their decisions about their portfolio. A lot of people ask, well, why don't you use the exponential? They're more accurate. We're not trying to be accurate in trying to use the moving averages. We're trying to see exactly what's happening at the moving averages that everybody else has on their charts. A lot of people ask, how many days does it take for your signal to confirm after a buy signal? Because there's lots of technical methods that say you need like 2, 3, 5 days or 3, 5, 10% to show there's been a change. The answer in candlesticks is 0. If you see a candlestick sell signal, like our evening star signal, if it opens lower the next day, you can be shorting immediately. Same scenario on the buy side. If you see a candlestick buy signal and it opens positive the next day and your stochastics are in the right place, you buy immediately. That does two things for you. It puts you in a situation where the probabilities are pretty strong you're going to be in an uptrend if you're buying on a buy signal. And two, you're buying early. And I don't have a chart here that would be good to illustrate. You know, for example, over here, that wouldn't be good. I'll find one. If you're buying based upon the confirmation of a candlestick buy signal the previous day, the Japanese race traders have a very simple stop loss procedure. You shouldn't see the price close more than halfway down that candle that told you the bulls were in control. If it does, the bears are still in control. Usually, Carol, the 20-day moving average occurs when you get into a steady trend, I mean a slow, steady uptrend. The 20 becomes much more prevalent than the because it won't move back to the 50. Something like this, choppy, you need to see bullish confirmation, which means if it opens positive tomorrow and starts trading positive, yes, you can be buying it. And then whereas logically, if this is a 90% probability that if it opens positive, it's going to trade positive, where's your stop loss? Very simple. It shouldn't come back down through this level. If it does, you close it out right away. If you buy and then the next day go short by selling more than you own, is that considered a day trade? Oh, RC, yeah, I don't know. You sell more than you own next day, no, you closed out the position. Now you happen to be short a little bit. All right, let me go through this. We haven't even gotten down through what we're trying to do is anticipate what signals and patterns are the best. So there's your morning star signal. What do we want to see the next day for our entry strategy? We want to see them trading positive, confirming this signal. When they confirm the signal, what's it telling you? One, that they're confirming the signal, and two, they're telling you the T-line's acting as support. You can stay long until you see a candlestick sell signal. Now remember, if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line, with one caveat. The caveat is the further away you move from the T-line, the higher the probability it's going to come back and test it. So if you see a gap up doji in the overbought condition away from the T-line, you start taking your profits because now you're in a high risk area. You can always buy back. It does another J-hook pattern. Now, this one had a Morningstar type signal with a little doji gap up. Notice the pullback. This was back to Betsy, your question about how do you tell whether you got a reversal or a consolidation. Right now, we're looking at this as being a consolidation because what's this that dojis tell you? That they're coming back with indecisive trading. You can see that. So if you're pulling back with indecisive trading, that's usually just profit-taking consolidation. So what's your strategy on something like this? If it opens positive, that means your uptrend is still in progress. Okay, so let's look at some of the biggies real quick before we go into some of the breakouts. Amazon trading way up. Now, there wasn't any way to project that. Now, you have to watch to see whether what Amazon does from here, whether it opens up and immediately starts trading down. So that's another thing that we must open and close above the T line. Yes, if you're buying something on the basis, so if I was buying something that was far away from the T line, if I'm buying, I immediately watch to see what happens at the T line. If it's close enough to the T line, where it closed right here at the T line, yeah, I'll wait to make sure that it is trading above the T line. Yeah, I don't know where Amazon's trading right now, but it was up here somewhere in the 1040 area. Let's see, Goog. I think Goog was also trading up strong, up in this area, probably back into this trend. And then the biggies like Vidya. Right now, there's nothing going on. So sometimes you've got good trades situations, like right here, told us we had a strong uptrend. Then there was our hanging man, and then kind of consolidation and closed all the T line. Nothing right here on NVIDIA. There's going to be times that you want to be in a trade, and there's times where the chart's telling you you don't want to be in it. Netflix, we had bought puts on this, but today's trading started moving back up, so you can see that there was too much buying going on. We closed out the put position. It wasn't doing what we would expect it to be doing if there was weakness, which was moving lower. Oh, this gray line, yeah. When fortunately, I'm colorblind between green and red, which doesn't affect me too much. It's kind of bad news if I'm out driving around and there's a stop sign in front of an evergreen tree. And Tesla, ever since the little kicker signal right here at the 50, this is why it's important to be able to see what type of signals you have at important technical levels. That kicker signal told us we're in a downtrend until we see a buy signal. So I'd still suspect with stochastics heading down toward the oversold area that the 200 is a viable target. NVIDIA, nothing major here. It could be a bullish harami, but then it will be important to see how they open it tomorrow. If they open up positive, yes, they're probably holding up, but I wouldn't be a buyer of NVIDIA until it breaks out through this level, telling me I've got a wave 1, wave 2, going into wave 3. Tesla, as far as the head and shoulders, yeah, you could, but right now I'm only trading this part right here. So my kicker signal telling me watch to see what happens when we get to the 200-day moving average. And then things like the indexes, like the Labu. Again, when they did the left-right combo, that's a bearish left-right combo. Notice you had kind of a doji hanging man, doji shooting star, left-right combo, closed below the T line, and notice what's happened since then. They've never been able to close it back up above the T line. But now we're getting down here in the oversold area with a doji. That tells me if I had shorted up here, I'm going to be a little bit more diligent to make sure they're not opening positive or trading, especially trading up above this level with the stochastics in the oversold area. Whenever stochastics get to an extreme, that's where I start setting my stops a lot closer, looking for a reversal signal. Wayne, no, we're not using the Elliott wave concept. Just keeping it very simple. Wave 1, wave 2, wave 3. Now, was wave 3 always going to be the same wave count or same magnitude? Not always. What's our most important factor? What what's seen as far as the selling. Seems to be a divergence between drugs and devices. Yes, but you can always analyze each chart based upon which sectors are acting the weakest or strongest. We're going to be way over time because we're not even near. So here's another one. Nugget, where was our selling? Left-right combo, failure right at the 200. Bearish and golf, notice they failed again with a shooting star. Kind of a hanging man. How long do you stay short on this one? Well, right now, this one looks like a wave 1, wave 2, wave 3. The gold might still be heading lower. I think, yes. So your Qs, yeah, unfortunately, it looks like the Qs were up a little bit. So if you had puts here and they start opening positive and trading positive above the T line, what's that tell you about this downtrend? Just get out. Not every trade that you put on is going to work. Candlestick analysis allows you to find out which direction a trend is likely to move. And then it also tells you when the trend is not working to close out the trade. That's the biggest bugaboo that I had when I was, first of all, the worst investor in the world, and secondly, learning how to use candlesticks successfully. What it's telling you is not what you think should be happening. It's telling you what's actually happening in the price trend and gets you out of position faster. So that whole concept of where everybody tells you to cut your losses short and let your profits run, the only problem in the 40 some odd years that I've been investing, I've never heard anybody tell you how you cut your losses short and let your profits run. Candlestick signals show that very clearly. Candlestick signals are not the estimate or the prognosis or projection of what might happen. Candlestick signals are telling you what's actually happening. Yeah, so if it opens positive tomorrow in the Qs, wait to see what they're doing with it. If they continue it positive. Now, this is what we're looking for. We're looking for the situations that tell us that we're going to be put into a situation where the probabilities of being in a strong price move are greatly in our favor. So we know what happens when dojis occur. That tells you there's indecision. We can see exactly what's happening. Let me make this big enough. Well, when we see a left-right combo, right smack dab on a support level, that tells you the probabilities are pretty strong that if they open this positive, what's it telling us? It's confirming our left-right combo, which is one of your strongest signals. And secondly, if they open up positive, they're confirming that signal. They're breaking out of this range, and they're telling you they're staying up above the T line. Just, again, puts you in situations where, is this going to move up, whatever it did, almost 100%? Could, or it could fizzle here. All it's really telling you is, at the time, it puts you in a position where the probabilities are greatly in your favor that you're heading in the right direction. Futures are dipping down. All right. Okay, so what do we got? There's our left-right combo. And where is it occurring? Right off the T line. And where did it close? Right smack dab on the 50. So if it opens positive tomorrow, what's it telling you? Telling you the 50 is not acting as resistance, and you're confirming a very strong reversal signal that if they're breaking through the 50, where's your next target? Potentially up here to the 200. So all we're really looking at is things that are telling us that if the confirmation, there's a left-right combo with a gap up, that's telling us wave 1, wave 2, there's a very strong start to our wave 3. And yes, and so this is what we will be doing. You're looking for situations like this. This is what we call the scoop pattern. Notice your flat handle, and then the scoop, And how did the scoop start? With a left-right combo, confirming the next day. Gives us a good slingshot effect to the upside. Once we have wave one and we start taking profits, now look what's happened. We had another left-right combo, and the whole thing starting to curl back up. So we've got a wave one, wave two, J-hook, wave three. Same height of candles. I don't know, John, what you're asking. Moneyball, where the heck have you been? Left-right combo. Oh, no, just a left-right combo, the doji, bullish, engulfing. This is the primary factor. If you've had a big bullish engulfing, then you want to see confirmation after that. No, they don't have to be the same height. Just usually an indication that you're going to get a strong move after the left-right combo. Into it, more of a fry pan bottom. Now they're breaking out to the upside. TLRD. Again, there was your, let me see if I can do this. Yeah, right there, you kind of had a breakout. And right here, you had a breakout. And notice how they did it. There's your inverted hammer, starting you back up. Then once they closed above the T line, they gapped it up. And then you had your best friend breakout through this level. So what this kind of alleviates is everybody, now the 3T line, the further you move away from the T line, the more effective the 3T line comes in. What was I saying? That's just great. Nah, I forgot what I was saying. But anyways, there's your best friend breakout telling us now we've got a brand new investor sentiment. RF. Wave one, wave two, left-right combo, breakout, wave three. What's my estimate of this? Well, if I can calculate this one from 13 to 1550, this should take me up into, let's say, the 1875 area. Now, if I was closer to, like, within 2 weeks of expiration of options or weekly options, I could buy something down here like the 15s and sell the 18s. Give me a little bit better leverage and lower risk. You can buy the J-hook in two places. One, right here, because you can see the J-hook starting, or two, when it breaks out above the high of the previous trend. It depends on how aggressive you want to be. Now, if the market looks like it's got a steady uptrend going on in the overall market, nothing changing, you might buy down here, anticipating they can break out through here. Or if the market looks a little bit soggy, you wait until it breaks out above this level. Remember, we're not trying to buy at the absolute bottom and sell at the absolute top. We're trying to get the fat part in between. The more correct trades you have, or the higher your correct trade ratio, the much better your compounding effect will be. Why is the inverted hammer bullish when there has been so much rejection? That's exactly why you're looking at it, Chris. That's what the Japanese rice traders explained to us. Let's say this isn't quite an inverted hammer, but let's say this tail was 2 times greater than the body. The Japanese rice traders would explain that the bears are happy, the bears are happy, the bears are happy. Then all of a sudden, the bears are nervous when they took it up, and then they closed it back down at the lower end of the range. They're relieved that it's closing down here, but they were nervous. The next day, when it opens positive, the bears say, shoot, the bulls are still here, get me out of this trade, and they start covering their short positions. Does this look like a cup and handle? This one you're asking? Not necessarily. Again, this to me is a J-hook pattern. Wave 1, wave 2, wave 3. A cup and handle is usually going to be related to a more to a fry pan bottom. Same scenario here. Wave 1, wave 2. What started wave 3? A hammer, doji, gap up through the resistance level. So what? I know what I was going to say. This alleviates that fear or that bad investor perception of when you see a strong move. I hear so many people say, well, I'm going to wait for it to pull back so I can get in at a better price. So you have to think of the logic of that. If you're looking at a confirmation with a strong bullish move, what's the last thing you want to see it do? You want to see it, don't want to see it pull back. What's that tell you? That's telling you the bears are still around. It's not going to be a strong move. Secondly, what's that also tell you about your flawed thinking? It's telling you that if it moves back and the moment you buy it, it's going to turn right around and go back up because you've got the immaculate execution wizardry. That's not what you want to be doing. You want to be buying this in strength. Again, you're not trying to buy at the bottom or sell at the absolute top. You're trying to buy when it's time to buy and sell when it's time to sell when the probabilities start going against you. What is that? Oh, that's terrible handwriting. So there was your inverted hammer gap up. Now, we've got a general rule, and this was another training that we did with the statistics of what happens when you have a big price move and it opens lower. The first thing you want to do is if you had bought here and closed here and the next day they open it lower, you close it out. You don't know how long they're going to consolidate it. And where's your next buy entry? Right back up here. If it trades back up through there, that tells you the profit taking's over. This signal or this message is still in effect. Oh, there was another one, and what one was it? I can't remember. Where it had a big pop up the other day and opened lower and it hasn't come back up yet. Iridium, inverted hammer. What's your ultimate inverted hammer? Your gravestone doji. Gap it up, wave 1, wave 2, wave 3. You can be buying this one on strength. Suncor, there's your kicker type signal. And where's all this occurring? Right here at the 50-day moving average. Kicker signal is your strongest reversal signal. It opens here and closes here. The next day they gap it up and move it the opposite direction. Tells you they've kicked the investor sentiment the opposite direction. Is there a way to see if a short squeeze in a candlestick pattern? No, but you don't care. All you care about is whether they're buying or selling. You're going to see that graphically. A lot of people say, shoot, the professionals wait until after the initial buying occurs in that first hour. If you're looking at candlestick signals, you don't care whether it's somebody's grandmother that's buying that first hour. As long as the price is moving in the direction that you want it to be moving, you want to be a buyer. Kicker signal on IMAX. Where do you think bouncing off the 50 your next target's going to be? High probability they're going to take it up to the 200-day moving average. Amazon or Google, Martin, that's what you have to wait and see. You want to see what type of trading they do after they open. If obviously they start selling off immediately, you don't touch them. Which kicker signal on IMAX? I'll go back to it. FCN, look where this broke out. Best friend signal breaking up through the 200. Now you wait to see whether they do a 45 degree off of here. IMAX. What is the difference between a kicker signal and a gap up? A kicker signal is when you see them opening here and closing down here. You can see you had a red candle. The next day they gapped it up above the previous day's open and went the opposite direction. A kicker signal gapping up from a red candle the previous day is also powerful. Yes, that's exactly what the kicker signal is. VP, hold on to your individual ones. The difference between a kicker signal and a best friend, the best friend is a doji followed by a gap up. A kicker signal is a bearish candle followed the next day by a gap up and going positive. GDI. This would be more of a best friend, kind of a doji spinning top gap up. Where's the likely target? Here's your trend. Here's your consolidation. Usually they take it right back up into that trend channel. Same scenario as why we were buying Square. As they gapped it up, where's our next likely target? Probably back up into this trajectory. So a kicker is only a kicker signal when the previous day is red. Yes. So that tells you that when the previous day was red, they opened it and traded it lower. Then the next day they gapped it up above the open and went the opposite direction. No, candlestick signals are not analyzing the fundamentals. Candlestick signals are analyzing that what everybody is doing, whether they're buying and selling. And that is already taken into account. Probably most of those people have made decisions based upon what they think the fundamentals are. We're just analyzing what everybody is thinking. So we don't need to be analysts as far as the fundamentals. That's what everybody else is doing. We're just analyzing what everybody else's analysis is telling them, whether they want to be buyers or selling. BANC, same scenario, long-legged doji. Remember, if a doji means indecision, a long-legged doji means greater indecision. And notice, again, I think, Betsy, this is consolidation because notice on the pullback, it's not very decisive. Now, after not being very decisive, they've gapped it up. That tells me wave one, wave three. What told me that they were buying here? The bigger the signal, the more compelling there's been a change of investor sentiment. No, it's called a bearish, Frank, it's called a bearish kicker signal. It starts with a bullish candle. The next day they gap it down below the previous day's open and go the opposite direction. So I've picked out these mostly because these are breakout type of situations. Notice the series of dojis, bullish confirmation, then a gap up. Where's your next likely target? This is where you kind of observe the obvious because everybody else is observing it. You could draw, I can probably do this. You can draw that and a parallel line. That's your trend channel. So where's your logical target? Back up to the top of that trend channel. So why is the trend channels more relevant using candlestick signals? Because we can see much more clearly what happens at the bottom and at the top, what type of signals we have. So you can see we had dojis right here starting back up. That gives us that much more, here's the one. Much more evidence that the channel's in progress. So here's that left-right combination, or left-right combo, followed by a big move. So if you were buying on this day, you closed out on this day. When do you buy back? When it comes back up through this level. So we've done a statistical study that we do a training on that, we know what the probabilities are that if they open it lower after a big day, what the probabilities are of getting out and when to get back in. There's a kicker type signal. It opened here and closed here. And then they gapped it up and went the opposite direction. Now, theoretically, a good kicker signal does not have any tail to the downside. It opens and immediately goes this direction. But overall, it still represents the same thing, that they've kicked this in the opposite direction. So what other element can you add to this analysis? You've got this J-hook type pattern. You definitely can be buying this one on positive trading, because where's your next likely target? At the top of this trend channel. All right, so a couple whiting, for example. This is where you observe the obvious. This is your typical price movement. Came up, didn't resist at the resistance level, actually used the 50 as a support area. And what usually happens? If they come up through a resistance level, they'll come back and test to see if that resistance level is going to act as support. We can see we had the bullish Harami, confirmation, breakout through this level. Where's your next likely target? Up here. So the advantage we can see with candlesticks is not only the direction, but we can also estimate what the magnitude. So if this was going to be a buy and the next move only produced 6%, that may not be worthwhile. But if we can look at something and say, all right, the next move could produce a 45% return, yes, that makes it much more worthwhile. So we can see that the oils are coming back pretty strong. Here's RES. There's your Morningstar signal, smack dab off the 50. This becomes a very high probability trade because you got wave one. Notice your hanging man, bearish confirmation. Now you've got your Morningstar signal right smack dab off the 50. Tells me I want to be a buyer of this one on positive trading tomorrow. All right, and boy, we're way over time. On the short side, this is your dumpling top. And notice where CELG started selling off with your doji gap down. How long do you stay short on this? Notice they could never get it back up above the T-line. Gapped it down again. Gapped it down again. If you were shorting right here and you're seeing indecisive trading here, I would use today's high as my stop. If they're still selling it off, they'll open it lower and trade lower. If they're going to start bouncing it, because notice how far away you've moved from the T-line, not only the T-line, but the 3T line. Does that mean it's going to magically come back up here? No, just the probability say that if you've moved that far away from the T-line and the 3T line, somebody's going to start taking profits on the short side and start bouncing it. Frank, I don't scan for any price stock. I can scan for the best possible trades on any given day in the matter of, if you don't know what you're doing yet with candlesticks, probably within 20 minutes you can find the best possible trades. I can usually find the best possible trades, both long and short, probably within 5-7 minutes each day. So I'm looking at the pattern, not the price. Now, my universe is all the stocks greater than 5 and trading more than 200,000 shares a day. If you want to trade higher price stocks, you make your universe all stocks that are trading above 20, 50, whatever you want to use, and that becomes your trading universe. There's other people that like to trade the $1 to $5 stock price. That you can scan that universe. So you can set up your own universe for scanning depending on what you like to trade. So here's another one, RGNX. rolling over. So if you'd shorted this one, when it came back down through the T line, you stay short until you see a buy signal. How many stock charts do you analyze daily before you're able to identify what to buy and sell? Choppy, I usually put out 2 or 3 stock picks every day in a video format for the members. But I also teach people. I don't want people just to have stock picks. I want people to learn how to scan for their own picks, because it might be that the 3 picks I make today don't open properly, which they didn't. Which ones were they? For example, ADMS had a big morning star signal. We put out the recommendation to buy if it opened positive above the 50. The fact that it opened lower told us not to get into that trade. Yes, on our weekend training, that's the last thing we do. Once we taught everybody to analyze how to look for the best possible trades, then we show how to very simply scan for those trades. Frank, you can also make your universe just optionable stocks. Which is the morning star? There's your big down day. There's your day of indecision. There's your third day. That was a morning star signal. So, and we're in the oversold area. Closed right on the 50. So what was our confirmation to buy today? We wanted to see the bulls are still there. The fact that they opened it lower and traded down here kept us out of the trade. Yes, I'll keep this. Just like this trade here, where we had our best friend signal and it opened lower the next day. Didn't get rid of it because it didn't execute on this day, but you can be buying it now because it's still confirming the signal. Please comment. I plan to install Parallels on MacBook Air and then install Windows 10 so I can use these. Does that sound useful? Yeah. Yeah. I think TC2000 can be used on both systems. That's something you probably might want to email Abraham. He can give you better instruction. Okay, what else do we got? Just a few more. Is this a terrible heat? The bigger the signal, the more compelling that if this opened lower tomorrow, you'd want to be shorting this one. We were long Chem for quite a while because of the best friend signal. Doji gap up off the 50 until we started seeing the hanging man, Doji. There was our bearish left-right combo, so we started closing out the position. Now it's closed back below the T line. Where's your first target from here? Probably back to the 50. Would the 50 be viable? Yeah, you could draw a parallel line through the tops. You could probably draw a parallel line to the bottom. Yes, a big body candle, the bigger the signal. Okay. Bristol Myers. Again, some people like the small stocks. Bristol Myers did a bearish kicker signal today. Notice what started the downtrend. Your shooting star gap down below the T-line. That told you this uptrend was over. Now, it didn't hold the 50. Where's your next likely target? Could be coming back down to test the 200-day moving average. Again, all these are putting you in situations where the probability is based upon candlestick signals. This is your island reversal. This one can be shorted. I told you if something failed up here. This is HLI. Houlihan Lukey. Still think that's a Hawaiian stock of some sort. But where's the next likely target? Back to the 50. An SUPN, another one that's a viable short, because where did this fail? Right smack dab at the 50 with doing a dark cloud. Where do you think your next target's probably going to be? Right here, the 200. What would that coincide with? Well, they bottomed them out before. An island reversal is, what was the one that did an island reversal? An island reversal is where you can draw right around here without touching any. That's a one-day island reversal. So it's telling you there's been a drastic change. Where do most people buy? They buy exuberantly at the top. Now they've gapped it down. I'd be ready to short this one on weakness. Okay. Kept us way over time. Are there any general questions on candlesticks? Also remember, a lot of this information that you're getting piecemeal on a situation like this, the bread and butter of learning how to use candlesticks are in these 2-day trainings. We start from the basic signals, the doji. Then we go through all the major patterns. Then what our high probability entry and exit strategies are. How to set your stop losses using the common sense of candlesticks. How to scan for the best possible trades. How to do much more accurate trend analysis. So anyways, this information is all based upon pure common sense. Just anytime, I just use a wave 1, wave 2, wave 3. Then the next part becomes another wave 1, wave 2, wave 3. All right. We'll do a few minutes of individual stocks if you just do one per person. The 2-day training is recorded. I guess you've already started. And then in 3.2 seconds, Jim do the double line to stop the recording. There we go. Yes, the 2-day training is recorded. So if you can't sit through the whole thing, you can always come back and study the part you missed. The left-right combo is a 2-day session or a 2-day signal. I can't remember which ones they were, but we'll probably find one. But it's a doji followed by a bullish engulfing signal or a doji followed by a bearish engulfing signal. Are you going to show us how to use candlestick intraday? Yeah, that's not difficult. Remember, this is a daily chart. Let me pick out something else. This is a daily chart on Netflix. The 10-minute chart, the 1-minute chart, the monthly chart, weekly chart, they all look the same. There's your 10-minute chart. So if I'm reading on an intraday basis, same thing, just use the same patterns. So usually during the day, if I'm trading some futures like soybeans or cotton or something like that, I'm using the 10-minute chart. Okay. Let's go through some of these real quick. I'll try to, now here's your bullish harami. That's why we bought calls, because that was a high probability trade right off the 50. Again, candlestick signals are based upon what's happening in investor sentiment right now, so we can see exactly what's happening at important technical levels, like a support level of the 50. There's your left-right combo, a doji followed by a bullish engulfing. And again, if you add the elements of everything everybody else is watching, where did that left-right occur? Right smack dab off the 50. CGI, you stay long, but you're getting up toward the overbought area. Once you start getting into the overbought area, be much more close on your stops. You gapped up on this one with a kicker type signal. You stay long, but I'd have my stop right now at today's open. MasterCard, nothing wildly exciting. All you can do is stay long on this as long as it stays above the T-line. And AMC, nothing real greatly exciting about this one just yet. I'd want to probably be more apt to buy it if it breaks out through this downtrending channel. HMNY, we're still short. Ever since your big reversal up here, your big evening star signal, you're in the oversold area. So our short is that we'd cover a short if it traded back up above today's high, but the estimate is it's going back down toward the 50-day moving average, or the 200, I forget what it was. UVXY, nothing wildly exciting here. If you're long, you stay long, but you definitely don't want to see this close back below the T-line. I think we did this one. You stay long. There was your inverted hammer. So if we had bought this, but I don't trade these stocks, but if you had bought this one, you would have closed it out on this day. But then you would have bought it as soon as it came back up with a buy stop when it came back up through the close of that first day. Overstock, just stay long, but you're in the overbought area. Pick a spot that tells you it shouldn't come back through. I would probably now use the halfway point of this candle. If it came back down through there, that's a good indication that the sellers are starting to take control. Marriott, same scenario. You're in a nice uptrend. You're in the overbought area. I'd put my stop at today's open. If it came back down through there, the selling has started. LPTH, same scenario here. Put your stop at today's open. You can stay long. NAC, nothing. You can't be short this one because it's below $5. I wouldn't be in this one at all. Corning, there's another example of when it came up here, a big price move. When it opened lower the next day, I would have closed out the position and then have a buy stop right up here that if it comes back up through that level, you can start buying it again. BNTV, that's a bearish kicker signal. First target is probably the bottom of this trend channel. Second target would probably be down here at the 200-day moving average. Yes, you can go short on that one. Unit, this is what you call a bobble. This is one of the patterns we'll be going over. Bobble is when they hit a resistance level. Notice how it pulled back, but they couldn't close it below the T-line. Now they've come back up through that resistance level. You definitely want to be a buyer of this one on positive trading, because if you took out the 50-day moving average, which is your obvious resistance level, what type of pattern do you have? You've got kind of a J-hook pattern. I was told at the Apple store to buy it online. Yeah, you could also talk with PC 2000. Another one that closed below the T-line. If you had bought this in the last couple of days, you close it out. You can always buy it back if it comes back up through the T-line. And again, there's that the bigger the move, there you have a big bearish left-right combo. You can be shorting this one. Too late to buy SQ? No, it just broke out today. I'd be a buyer of this one on positive trading tomorrow. NEOT, another one you can be buying on positive trading because you see the Morningstar signal right smack dab off the T line. And there's a kicker signal on Service Corp International. You can buy this one expecting a 45 degree. TRTN. This one has to open positive. Notice when they gapped it up in the overbought condition, that's, again, the most basic of the candlestick price traders analysis. Where do most people buy? They buy exuberantly at the top. That's where you start watching for your profit taking or your selling. If you're still in it, it has to open positive tomorrow, stay in it. If it opens lower, close out the position. Same scenario here. There's your kicker signal. There was your first sell signal, and they started trading it weaker. Where do you think your first target was going to be? Back to the T line. Take your profits. Right now, I wouldn't be in this one. I'd wait to see if they're going to support at the T line and do a J-hook pattern. Another big breakout right off the 50. Where's your target? Come right up here. This is probably your next target. CVRR, if you're short, you stay short. YPF, dark cloud up here. If it opens lower tomorrow, you take your profits because more than likely they're going to come back and test the T line. Cisco, bearish engulfing. Another one that you probably want to see it open positive and trade positive. If it starts trading lower, you want to take your profits and wait to see what it does at the 50. Ellie, I think it's $8.95 for non-members, but somebody pointed out it'd be much cheaper to go ahead and join as a member because then it's like only $4.95 at that point. Yield, stay short. Intel, stay long. Just again, there's that double doji setup that we were looking for over here on BPMC, that if it opens positive, you want to be buying because that would be confirming your fry pan bottom. Team, we did. That's the one that opened lower. Right now, I wouldn't be long or short, but I'd go long as soon as it came back up through that level, the high of that first big day. Another nice breakout of GLH. This is your best friend, Doji gap up, making possibility of the 200-day moving average being your next target. JB Hunt, you can stay long on this one. Again, kind of a Morningstar signal off the 50, or I'm sorry, off the T line. Bounced up off the 50. You can stay long as this stays above the T line. SPRT, probably still heading down at least to the 50-day moving average. FN. Yeah, if you shorted it, again, you don't have too much of a trajectory. If I was going to short it, I'd probably want to trade back below the low of this candle. But you do have a bearish left-right combo after kind of a shooting star failure at the 50. You can short this on weakness. It needs more confirmation to the downside. We have your programs and been around a while, but it still is not easy. Paul, the suggestion I make to people when it's got a lot of information to digest is just concentrate on 2 or 3 signals or patterns. Once you learn those and you understand how they work, now it becomes a lot easier to get into the other, start adding new patterns or new signals. Again, this is not rocket science. This is stuff that the Japanese rice traders have illustrated as being how human nature works time after time with an extremely high degree of probability. Baba, you're in the oversold area and have a doji today. Makes this one very simple. If it opens positive and trades above today's high, that tells you that's where they're supporting right in here. If it opens lower, you've got the potential of a bearish doji sandwich breaking this level, continuing to take you down, filling these gaps down here. Remember, the very simple rule of a doji is that they're going to move it in the direction how they open it after a doji. Netflix was trading a little bit positive after hours, probably as a sympathy of Google and Amazon. I had bought some calls today, but the fact that they closed it right back down here in the sideways range, I closed it out because that now doesn't become a very good chart to look at. I want to find something more like this somewhere where I know the probabilities are much greater in my favor in one direction or another. VIPs, I don't think that's quite a bullish engulfing, but it's got a Morningstar signal and pretty close to a bullish engulfing. The fact that it might not exactly be a bullish engulfing tells me to be a little bit more, if it comes up to the 50, to be a little bit more diligent to see whether it gets through that level. Is that a symbol, Bob? Leg? Leg it and flat. This one I probably wouldn't be long or short just because you don't have any direction right now to it. Let's see. I thought Bigalow reported during the day, but it didn't really do too much for it. If anything, I'd be shorting this one on weakness tomorrow. Other than that, it's not anything real extravagant right now. Now, just because the chart doesn't look good right now, doesn't mean you can't come back to it later when there's a better pattern. TransUnion, all you can do right now is stay long as it stays above the T line. Remember, the bullish confirmation, the bigger the signal, the more compelling you're in an uptrend. Yes, there is scans. David, unfortunately, you're probably better off asking that in the chat room during the day. Because people can show you right, or they can give you those formulas where you can copy and paste them. In the NFL, I don't have an NFL chart. What are the indicators that market is risky? Well, you've got the NASDAQ that is rolling over unless it opens positive tomorrow because of the Amazon and Google, and you've got a left-right combo after a gap up in the S&P 500. So your stochastics are heading down. So you've got two indexes that are selling off, while you'll have one index, the Dow, trading higher, but it traded a little bit indecisive today. Not that there's any major reversal coming up. Just you might see some consolidation here for a while. Bullish Harami. Let's see. Was there? Look and see if there was a more of a question. Oh, Pshaw. Frank, on November 4th and 5th. It's a Saturday and a Sunday, obviously. Oh, Netflix. All right. Yeah, this is the bullish Harami, followed by a gap up, right smack dab off the 50. Shopify, it's in what we call the bobble. Notice when it came up and did a bearish engulfing signal right at the 50, but it hasn't closed below the T line. If you stayed long, you don't want to see it close below the T line. If you're thinking of going long, you wait for it to come back up through the up through the 50. That'd be a bobble breakout. This is what you're looking for, TSE. All you can do here is stay long as it stays above the T line. CNAT, just stay short. Notice your big left-right combo here, and then a close below the T line. If you could short it here, right now you don't want to be in it because it's below $5. You can't short it. But I wouldn't be in it right now. It's going the wrong way. And Skechers is another one that once it gapped up, that's a big kicker signal. The fact that they brought it back down and started trading it off told you to get out of it, that it was probably coming back. You don't know how far it's going to come back, but you can always be a buyer if it comes back up through that $34 level. Yes, I'll show you how to use the candlesticks intraday. That's a very simple process. An inverted hammer is bullish, yes. It's telling you that they've scared the bears, even though it closed back down at the lower end of the range. But when they open it up positive again, the doubt that it created in the bears previous day is confirming that doubt, and they start covering short positions, or everybody starts buying. Carol, no, there isn't a way to find out if it's going up for a while unless you decide instead of using the daily chart, you go to your weekly chart. And so there's different, the different time frames. So the longer term charts can show you what's happening in the longer trend. Yes, the patterns on the intraday charts are just the same as if this could be a 1-minute chart, a 10-minute chart, an hourly chart, or a daily, weekly, or monthly. DK, that's up to you. I usually trade intraday off the 10-minute chart. When the 10-minute chart is setting up and I'm getting ready to buy, I'll flip down to my 5-minute chart. And then when I'm ready to hit the buy button, I flip to my 1-minute chart to make sure it's still moving in the right directions. T-line bobble. Yes, the bobble is usually the I'm trying to think of where a bobble is. John will have to find one. When you say positive trading tomorrow, do you mean that it opens and closes above the previous day's close? What if it opens lower but closes the previous day? If I see something, what one would I be looking at? Here's one that will probably be recommended. I want to buy this on positive trading. Now, what we teach people is in the training session, the different entry strategies. So, for example, let's say it opened lower. I'm not going to touch it. But if I see it start moving up, back up above the open of the previous day, what type of candle is it creating? It's creating another green candle, and what's it telling me about the confirmation? It tells me the bulls are still there, so I'll start buying it then. Now, that also means I don't want to see the Dow opening down 140 points, and even if this opens positive, when the Dow looks like the pre-market futures are showing it's opening down 140 points, I'm not going to jump right in because obviously the selling of the Dow or the other indexes are pretty much telling me I should wait a little bit to see what's happening. Momo failed at the 200. You stay short until you see a buy signal. And STG, there's a Morningstar signal. So if I'd been short I would have covered my short position at the doji's high today. Now I can get ready to go long, but in this case, I'm close enough to the T line that I'll probably wait for it to close above the T line before starting the buying. Kind of the same scenario on OD, ADOM. Foot Locker, you can start buying this one. You've got kind of a little scoop fry pan, but obviously you want to see what happens right here at the 50. If it fails at the 50, you come back out. You want to see it get through the 50. FedEx, broke out through this level with kind of that double doji. Anticipate more upside, probably getting right back into this trend trajectory. As a new investor trader, I try to be in as much webinar education I can. I've never seen as much info given as today. This is awesome. Thank you. Victor, this is only because being the worst investor in the world at one time, I tried to learn everything I could to keep my emotions out of my trading. Let's see, calm. So that's all you're getting is all the information that helped me become the worst investor in the world to where I'm consistently taking money out of the markets every month. Another J-hook pattern. There's our left-right combo. You can stay long. Now, obviously, you want to see what it does right here. If it breaks through that level, wave 1, wave 2, going into wave 3. Baba gapped up after close. All right, so if it gapped up, did they report earnings or something? I thought they reported during the day. If it gaps up, probably want to close out any short positions very quickly. HTHT, there's your left-right combo, evening star signal, broke this support level. If this opens lower tomorrow, you can be shorting it. And Apple really isn't doing much of anything. Right now, I wouldn't be long or short Apple just because there's no direction to it. PPHM, you can see the big fry pan bottom. All you can do is stay long. I don't know what the volume is on this one, but you stay long as it stays above the T line. Bidu is down after hours. All right. That's probably good short coming back to the 50. QCOM. Nothing of any great consequence right now. Even though it bounced up off the 50, it didn't do it with any candlestick signal. So that would be something that I probably wouldn't be trading because there just isn't anything telling me there's any power in the direction or in the stock direction. Is that Alibaba? Yeah, this one opens higher. Nothing here. You don't have any reversal signal. And if you look at this chart, which direction is it going? It's not going anywhere. So the whole point of candlestick analysis is to find the signal and know what your trend is likely to be. If you're looking at a chart and you can't tell what it's doing and there's no signals, move on to something else. There's 10,000 trading entities out there. You're always going to find more good reversal or trend signals than you're ever going to be able to handle. So why stay in something that's not very descriptive or very not a good chart? Boeing, I wouldn't be long or short right now. Again, absolutely no direction on this one. Choppy, I think we answered that one. Paul, no, this is, yeah, I eat too many dinners as it is. Unit, was unit the bobble? Yes. So this one I'd be more apt to buy on positive trading just because of the probabilities that you're breaking out of a bobble pattern. All right, Baba. If it opens positive and you were short, if it trades above this level, especially with your stochastics here, you cover your short position. The probabilities are going against you that they're trading down anymore. OCHB. Oh, that's a toughie. This one has to open positive, or if it opens positive, remember, this is profit taking. If it opens positive, you can be buying it. Then you just don't want to see it close back below this level. Had a breakout, but then they sold it off. So if you bought it today and it opens lower, you're right back into this range, close it out. It didn't work. All right. A bobble. Oh, what's a unit? A bobble is where the first move comes up, fails at a resistance level, pulls back, but can't close below the T line, and then comes back up. So it's kind of bobbled in here. And then when it comes back up through that resistance level, now if you took out that resistance level, you can see you'd had a J-hook pattern. Okay, kept you way past. Whoa, man, it's almost 10 o'clock. All right, everybody. We'll see you bright and early tomorrow in the chat rooms. We'll see you then.